What's going on, good people? Welcome back to another episode of the Journey to Get Funded. Today is day number 7. It's October the 2nd, 2023. We made some trades today, so let's get into it. So first and foremost, let's talk about the important levels that we have on the chart today. So we have yesterday's closing price represented right here at 33,731, and that will play a very important role today. But before we get into the trades that we talked about today, because yes, you did read the title right, I did pass the evaluation account, but I had to do it in probably the most difficult and arduous process that it took to actually become successful. So let's talk about that real quick, because if you see, I'm actually doing a challenge for Apex Funding, which is a different prop firm than the one that I started with, which was Top Step. Now for that account, I actually failed that account on Friday. Now I have the live session up on my Top Trades Futures page, so I have the first hour and a half. But what I didn't realize is that once you reset an account, it erases all of the trades that you made beforehand. So if you want to go back and write up your notes and take the screenshots, you can't do it. So I pretty much just had to wing it, but I wrote my notes out anyway, and I wanted to talk about that real quick because it was a lot of bad mistakes that I made on Friday that I feel like you guys could learn from, and that I definitely can learn from. So let's talk about it real quick, and then let's get back to what we did today and what we did to correct our mistakes. So the lessons from September 29th. Number one, discipline needs to be present for the whole session. Because see, I went from negative to positive, and then from positive to negative, and back from negative to positive. So I had multiple opportunities to just sit back and say, okay, Ty, you were negative, you made it back to the green. Now you have a decision to make. You can continue to be impatient and make bad trades that got you down into the red before, or you can turn it around, make good trades, wait for your best setups, and make the right decision so you can end the day in profit and end the day in the green. But I chose to make the wrong decisions, and you know, that's on me. I'm responsible for all of the decisions that I make. There's nobody holding a gun to my head and saying, hey, you have to trade this and you have to do this. All of these decisions that I'm making are decisions on my own, and I hold myself 100% accountable. And when it comes to trading with large size, I know for me, one slip in discipline could be the end of things, because then I start making bad decisions behind bad decisions. I'm not really as skilled as I want to be quite yet in being able to make a mistake and then immediately correct it and bounce back from it. It's like I'll make a mistake and then come back and double up on it and make it again before I finally realize, oh, hey, Ty, maybe you shouldn't do that. So that's something I'm working on, but I live in reality, and I know that it's better for me to not even go down that road, because it's hard for me to turn around once I'm going down that path. So that's the one of the biggest things I learned right there from last Friday, which is you need discipline for the whole session, always. So then let's talk about number 2. Learn to accept the bad days. And that's so important, because the best thing for me to do most of the time is just walk away. But that's also the hardest thing to do, because you just feel like, okay, just give me one more trade and I can get it back. Because if I have this one good trade, then I can make another one and then work myself back into profitable territory. Okay, that's a good idea to have before you hit your loss limit. But once you hit your loss limit, you got to remember why you have a daily loss limit. It's there for a reason, to protect yourself from yourself, because a lot of times when you're in the heat of the moment as an active participant, it's hard for you to sit back and say, wow, you know, it's just not working for me today. Let me go ahead and call it a day. You more so would have the tendency to say, man, I know I can do this. I know I can get it right. Let me do it right here, right now. And it might be true that you do know what you're doing and that you can get it right, but not on that specific day. So you got to walk away, come back the next day, get your mind right, study, hit your charts, figure out what you need to do, and then come back the next day and correct those mistakes. Don't cheat. Don't keep trying to push the issue if you've already hit your loss limits for that day. So that's one of the things I learned also, which is you have a choice. You can either continue to make bad trades, or you can have a bad day, stay a bad day, and not turn into a terrible day. Because every single big losing day that I had, it started off as a smaller losing day. And I had opportunities along the way the whole time where I said, Ty, you don't have to take this trade. You're past your loss limit. You could stop. But I was like, nah, keep going, keep going, keep going. But it's all about discipline and being able to avoid that. So it goes back to what we said in step number 1, having the discipline to be able to actually take a bad day and just live with it. You can't win all the time. You got to learn how to lose, or else you're destined to fail and destined to have bigger losses down the road. So always remember that, and that's something that I really took away from that moment right then and there. So let's talk about the last thing from Friday, and then let's get back into what we actually did today. So last but not least, number 3, having large losing days hurts my confidence way too much. And I say that because it makes me feel like I have to make everything back immediately the next day. I don't know what it is about my mental makeup, but that's just how I am. So this leads me to being in a very strong state of impatience, where I'm like, look, I need to get it, and I need to get it today. I can't wait till tomorrow. I can't wait till next week. But that's only a mindset to have about something in life that you can control. I can't control what the market is going to do or what opportunities the market is going to present to me on that specific day. So if I took losses the day before, I just need to come in that next day and say, look, I'm waiting for my best setups. If the market offers me my best setup 10 times, I'll take it 10 times. But if I only get it twice, I only trade twice. So I need to have a mindset more so like, hey, I'll take what I can get, make the best trades possible, and then eventually work myself back into profit. Now, sometimes that might happen in one day, but sometimes it might happen over the course of a couple days or the course of a couple weeks. But you can't put a timeline on it and say, this is when I want it to happen. You just got to take it trade by trade, day by day, and session by session. And eventually, if you make the right decisions, you'll be able to work yourself back into the place that you want to be. So that's something I really learned from. And I think it's important to control your losses, because when I have small losses, my mental makeup doesn't get affected too much. If anything, a regular losing day just motivates me, because I'm like, ooh, I know exactly what I did wrong, and I know exactly what I need to do to correct it tomorrow when I come back. So I'm motivated that day, like, ooh, okay, I'm gonna study hard, work hard, hit my charts, come back tomorrow and get these things right. I don't think I've had too many regular losing days where I've came back the next day and doubled it up and had 2 losing consecutive days in a row. Most of the time, I'm able to bounce back and then get back on track and keep going like I was before. But it's those bigger losing days that affect me the most. Anytime I've had a big, huge losing day where I'm way past my daily loss limit, I have a tendency to come back that next day and continue to keep making bad trades over and over again, because of what we talked about earlier, that mindset of impatience. So these 3 things were the biggest takeaways that I had from Friday's session. I did a lot of studying this weekend. I did a lot of thinking about not only how the market moves, but my behavior in terms of how I like to trade the market. And I pretty much came out with the idea that it comes down to discipline, patience, focus, and strategy. So I came into today's session and I just wanted to do what I needed to in order to be successful. So let's go ahead and get into it. So I still have the evaluation account for Top Step. That's still open. Now, this one for Apex, I chose this one because it was a lot easier, in my opinion, to actually get it done in a smaller amount of time. Because for the 25K account, you have a $1,500 profit target and a $1,500 maximum trailing drawdown. So I planned on trading the maximum amount of size. So that's 4 contracts. So $5 a point, that's $20 a point for each trade that I take. So I divided that by 1,500, and I believe it came out to around 75 points. 15 to 20. Yep, so it was 75 points. So I looked at that number and said, I believe that I have the ability to be able to achieve 75 points. Maybe in one day, maybe in 1 week, but I know that I can achieve that. And it just so happens that today was a super volatile day, and I was able to achieve all of those things today and pass. So let's go ahead and talk about these trades, talk about the strategy that I use, and why the strategy that I use today is not going to be the same strategy that I use once the account gets up and running and is actually funded. Because today I definitely went super hard, super aggressive, trading max size, but that's just because I wanted to go ahead and get it over with, knock it out the way, get funded, and then focus on the process leading up to my account actually becoming real, and focus more so on that rather than continuing to do the challenge over and over and over. So let's talk about the trades we made today. So let's go back to the screenshot actually. All right, cool. So let's start right here at 10:30 this morning, and let me actually give you a quick backdrop of what was going on before we came into the screenshot today. So before the screenshot, when the market was in the pre-market hours, we were pretty much trading within this range between 33,630, and then we had the top side level at 33,668, and we pretty much bounced around in that zone all morning long until the market opened at 9:30. So when we opened at 9:30, we had a false breakout to the downside, which led to a false breakout to the upside, which eventually led to the bottom of the zone getting violated. So a lot of times in the market, when you have a zone like this or a range like this where prices are trading in between the range up and down, sometimes you have a tendency for one of those sides of the range to actually get violated. So in today's scenario, the bottom of our range got violated and that level held up no longer. Now the top side level of resistance at 668, that's still held strong. So we could use that as a reference point to either look for short trades or to just get out of any long trades if we were trading up into that level. But today I was just super patient and I was like, look, I see the range bound market. I could participate, but I'm not quite sure because it seems like every time I get into a range bound market, that's when the range no longer holds up anymore and it starts to break out to whatever direction it wants to move. So I said, look, I'm not getting caught up in that today. I'm going to be patient enough to wait for my best setups. And I pretty much had to wait an hour and 15 minutes until 10:45 to actually make my trade from the time that I started trading. And I think that's one of the things that I'm most proud about today when it comes to my performance, because on days in the past where I was less disciplined, I might have said, you know what, look, the market's not giving me exactly what I want, but it's giving me kind of what I want. So I'll take that setup, even though it's not the best possible thing that I could have. But today I was disciplined and I said, look, man, I'm making the right decisions and the right decisions only. If it doesn't fit my trading plan, I'm not trading it. Plain and simple. If I have to sit here from 9:30 until 4 o'clock and I don't have to trade at all, I'll do that. But if I get my trades, I'll take it. And that's exactly what happened at trade one. So let's go back to the screenshot real quick. So right here, if we read the notes, it says, I shorted here during the downtrend as prices came back to retest a zone breakout. So that's the zone that we were talking about a little bit earlier, right before trade number one. So once prices came back up to that level, I just simply took my strategy and I applied it. So I like to look for prices to come back and retest the level that we initially broke out from. And then once I see prices start to move away, that's when I short and look to just take prices back down to whatever level of support is immediately below. So on this occasion, I just took prices back down to the bottom of this specific candle and took profit at my scalp profit target. So that actually led us to trade two. So on trade two, that was more so a continuation move from what I saw on trade number one, because prices came back up. They retested the entry price where I went short from trade number one. And once they broke back down below this higher low right here, that level of support that the higher low was given before now turned into resistance. So anytime I'm in a downtrend and a higher low gets violated, I look to use that level of support from that higher low as resistance. I want to see prices come back, retest that level, and once they do, I'll short as prices are moving away from it, and then take it back down to the next major level of support below. So on this trade for trade number two, I shorted right there resistance and then just took it back down to this wick that was established a little bit earlier on the initial breakout from that zone. So that was trade two. And after that, we see prices push back up. They get back above what used to be the previous zone from the pre-market right here, and push above that level, come back down to it, establish a higher low, push up, create another higher low. And from that point, that's where I drew this green zone right here. So I know a lot of times when it comes to the higher low strategy, I'm usually just drawing a singular level of support on the lows of that actual pivot point or swing low. But when you have two higher lows that are relatively close to one another, you can actually get yourself a rectangle and box that up and use that zone as an entry point or a exit point, depending on which way the market is moving and what you're doing. So that's where I got this zone from right here. I connected this first higher low to this second higher low and then zoned it out. So once we created this next higher low, we pushed up, broke past this red line right here, which represented the top level of the zone that we were trading in the pre-market at 33,668. So once we broke above that level, I said, okay, I see yesterday's closing price up here, and I'm pretty sure that that's more than likely the level that prices are going to. So I had an urge right here to just go long and say, look, I'm holding it up to yesterday's closing price and I don't care what the market is doing. But I've learned from my past days that anytime you have a good idea about where prices are probably going to move, you don't just act on that idea right then and there. What you do is you wait for the market to give you a signal that aligns with your trading plan. And as soon as you get that, you execute, you get in, and you hold your trade to whatever level you're trying to aim for. So that's pretty much what I was looking for right here in this overall junction, but I couldn't get it because it came back down right here, created a higher low, pushed up, created a second higher low, and I was just waiting for prices to come back and retest that level because I knew once they did, I'm taking that long trade and I'm taking it back up to yesterday's closing price. Now, we actually never came back to retest that higher low, not initially. So we eventually just pushed up to that level without a retest of the higher low. And that pretty much led me to trade 3. Now right here, because I missed the first push up to yesterday's closing price, I revenge traded right here and I tried to play catch up. And that's something that you just don't want to do, especially when it comes to scenarios like this where you had an idea, you saw the idea work, and then you tried to play it the second time. It's like, nah, don't do that. You play it the first time. If you're in it, you're in it. If you're not, you're not. Because guess what? If the market hits that level, is your screen just gonna go black? Is the market gonna completely shut down and say, okay, the stock market no longer exists? That was the last day. It's it. No more trading after this. That's not gonna happen. The market is still gonna be open. There's still gonna be plenty of opportunities to be had. So all you gotta do is sit back and wait for your next best setup. So that's really the biggest lesson I took away from 3 right there. Don't try and catch the second move. And if you do it from the right levels. So based on my higher low strategy, the proper way to trade the higher low in an uptrend is to wait for prices to come back, retest the lowest level of, well, the lowest price levels of the support level for that higher low, and then you go long. So that's pretty much what I did right here on trade number 4. So I went long here based on the idea from trade number 3, but this time I bought at lower prices like I was supposed to. And look at what happened on trade number 4. I followed my strategy the way it was supposed to be followed, and I was able to take a nice little profit from there. So that was a good trade, and that was the way that I should have done it the first initial time. Now we come back to trade 5 right here, right after trade 4. I pretty much got greedy right here. I doubled down and was like, well, if I made profit on trade 4 and it didn't hit yesterday's closing price again, more than likely it's coming back up to test it a second time, since it looks like it's on its way up there, right? But my break even got hit, and I feel like I was very lucky that it did get hit in this situation, because if it wasn't for my break even, I would have took a big loss, because not only did we have a double top right here, but we had a double top coming off a major level of resistance at yesterday's closing price. So looking back on it, definitely wasn't my best trade, but whew, thank God for the break even stop, because it definitely saved me some big losses right there. So we initially see prices break back down below those higher lows. And anytime prices break back down below a higher low when you're in a downtrend, like I was telling you guys before, you can use that level as a level of resistance to go short from. Because notice how once we broke past that zone, we came back and we retested it. So if you were looking for that short trade, you could have taken it. The only reason I didn't take it right here is because anytime you have a strong uptrend, I've learned that it's better to not take that first higher low setup violation that you get. So you might see prices break back down below a higher low and come back to retest it, but I've seen so many scenarios where they keep moving to the upside and they do not respect this zone and keep moving down. They actually keep moving up. So it's a little bit too risky for me to take that first short trade coming off of a very strong downtrend. I like to take the second one. So that's pretty much my mindset right there, and why I skipped that trade. So then we pretty much see prices just fall after that and fall all the way back to these lows that we established a little bit earlier at 1040 when we initially broke out of that zone from the pre-market. So once we come back to that level, we kind of consolidated a little bit right here, and that led me to these next series of trades at 6, 7, and 8. So let's talk about that. So right here, once I saw prices break back down the lows for the day at these levels at 33,540, I just assumed that more than likely we should be coming back to retest that level, and then we should have a sell-off and see the next leg of the downtrend continue from those levels of resistance, which was a great idea. But it goes back to the concept of having a good idea, but waiting for the market to give you confirmation. Now on 6 and 7, I just shorted because prices were coming back up into that level. And that's not necessarily what you want to look for, because we really had no previous lower highs to give us any inkling about what the market wanted to do. So me going short at 6, logically it makes sense, but from an actual tactical standpoint, I was just shorting based off of one factor, the fact that we're coming back up to resistance. If I'm going to take a trade, I need at least 2 factors before I even want to decide to get in that trade at all. So that's the biggest lessons I learned right here on 6 and 7. I took losses right there because I was just way too early trying to anticipate something that was going to happen, rather than letting the market give me confirmation and seeing the move already start to form and then getting in. And pretty much that's the mindset I had when I came back on trade 8. I was like, okay, look, I see that the market is in a downtrend. We should come back to retest resistance, but I'm not just going to short from there this time. I'm going to wait for a lower high to get made. And once I see the lower high get made, then that's when I can feel confident going short. So once we push back down to that higher low that we established right here at 6 and 7, we pushed back down. We came back down to the higher low, pushed back up into, it's a very small zone right here, but we pushed back up to the top of it. And then that's when I shorted, and I took prices back down to my scalp target a little bit further down below. So that was trade 8 right there. We come back, create a swing low right here. So I circled that up, drew a level of support across it, and that would make a big difference a little bit later on, but we'll get into that very soon. So after this higher low, well, this swing low got made right here, we pushed all the way back up to retest the major level of what used to be support but is now acting as resistance that got established from the initial breakout this morning once we broke out of that zone from the pre-market. So notice how the market is making sense logically. You know, we're breaking past major levels that have been holding up for hours and hours, and then we're coming back to test those levels. So everything is kind of telling the story like it should based on price action principles. So once we hit the top of that level, we sell off, create a higher low right here. So I'm like, okay, it's a higher low. Let me circle it up, draw my level of support across the lows, and then look to use my higher low strategy depending on what the market wants to do. So we push back up to the top of the zone right here from the previous higher low, and that's where I took trade number 9. Now at 9, if we read the notes, it says I shorted here, but I cut the trade once I saw that the higher low the higher low from previously just got formed. So that's one of my biggest rules also, which is anytime you see a higher low get formed, it doesn't matter how strong you think the downtrend might be. If you're in a short trend, if you're in a short trade and you see a higher low, you get out, you don't hesitate, you get out right then and there, and you ask questions later. So that's exactly what I did at trade number 9, and I'm happy I was able to do that because prices eventually did come back up to retest that major level of resistance one more time. So once we hit that level for the third and final time, we sold off, came back to this level to retest what used to be a previous higher low, got pushed back up to the zone once more, and then got rejected. So once I saw that rejection, I was like, okay, cool. We had a triple top up here at resistance. Then we had a lower high get formed right here. So that right there are the 2 signals that I need to confirm to me that it is okay and it's acceptable to go short. And when you combine that with the fact that we were in an overall downtrend, that was actually 3 signals that told me that it was okay to start looking for the short trades. So that's pretty much the reason why I took the short at trade 10 as we came back to retest what used to be the support level of the higher low, but now that we've broken through it, it becomes the resistance level. So I looked to short from resistance in a downtrend and just take it back down to the next major level of support down below. So I took it from one higher low up above back down to the next level of support for that higher low that we just established most recently, and that was trade number 10. So after trade number 10, I was pretty much, I want to say 6 or 7 points away from actually hitting my profit target to get funded and pass that $1,500 profit target that we need to get for this account to actually be successful. So on trade 10, I felt like I could have held that a little bit, but I cut it because I'm like, look, let me just lock in what I have, because if I only have 6 points to get, I feel like I can do that fairly easily. So that's pretty much what led me to trade number 11. So my thesis right here was, if trade 10 was successful, then I want to see prices come back retest this previous swing low where we had this support level at. And then once they retest that swing low, I want to see them come back, retest what should be resistance now from that higher low. And then I want to take the short trade and look to take that back down to the next major level of support below. So that's pretty much the idea that I had on trade 11, and that's pretty much what I went through and what I executed. Now, I would say the only reason I closed this trade early was because I hit those 6 points and I was not trying to play any games after that. I'm like, look, it's locked in. I'm getting out and I'm leaving it where it is so I can make sure that these gains stay where they are and they don't go back down under that $1,500 profit mark. So I cut the trade right here. But if I would have held it, it would have definitely hit my scalp target and probably a little bit more than that if I wanted to turn this into a swing trade. But I didn't. I was like, look, I came here for a reason. I have a goal. I accomplished it. I'm done. I'm out. I'm gone. So that's pretty much what I did in order to get funded today. I'm proud of myself because I was able to do it in one day and I traded maximum size, but I still kept my wits about me. I didn't let, those intrusive thoughts come in like, hey, you could take this trade, Ty. Why not? Go ahead, do it. It's like, nah, I'm gonna try and be as disciplined as I possibly can. Now, going forward into the future, now that we passed the account and we have it, we still need to trade 6 more days. So I'm going to trade micros and trade only the best possible setups and make sure that I keep this account above 1,500. But what I need to do now that I know that it's probably going to be I need 6 more days. So in terms of trading days, that's actually a week and a day. And then add on another 2 days for them to get the account set up. So in real time, that'll probably be like anywhere from 10 to 12 days before I'm actually back up with this live account and trading a funded account. So quick backstory about me. I actually got funded back in 2019 2 times, and I lost the account 2 times when I was with Top Step. And one of the biggest lessons I learned from that whole process was you don't finish once you get funded. No. That's just the beginning. You don't want to get too up on yourself. You don't want to get too confident. You don't want to go around thinking that you're the next Gordon Gekko or the next Paul Tudor Jones or Warren Buffett. It's like, nah, man. You got to continue to do the things that got you to this point. And that's where I went wrong back in 2019 because I got a super big head. I started thinking that I could do no wrong and everything that I do was just going to be perfect. I'm going to be 100,000 there by the end of the year. I'm going to make so much money. It's like, look, you can think like that, but you don't want to operate on a day-to-day basis with that being your motivation. Your motivation should always be to come into the market and make the best possible trades and follow your plan as perfectly as you possibly can. So I've learned that within that transition period, you got to focus on still staying sharp, still being able to come into the market every single day and take your best trades, and that's it. So you got to be able to maintain those things that you did. So that's my main focus going forward over these next 2 weeks. I got to stay locked in. I got to keep practicing. I got to keep making good trades. So in order for me to do that, this is my plan of action. I still have my personal account. So I'm going to put a little bit more capital in there, not enough to trade the type of size that I could trade in a funded account. I'm still going to trade micros in my personal account, but instead of trading 2 micros, I'm probably going to trade 4 micros and then just cap it at that level. So that way it's not too much risk, but it's enough where I feel like it's similar to the situation I would be in when I start trading a funded account. So I'm going to trade my personal account and I'm going to work on making the best possible trades every single day. Nothing else will be accepted. Anything else is unacceptable. It's the best and y'all can keep the rest. That's all I want. So in order to do that, I think I just need to pretty much stay up on my training routine. I can't get lackadaisical. I can't, get complacent. I got to keep going and I got to keep going harder. So when I actually get the account, my plan is not to trade 4 contracts like I did on this $25,000 account from Apex, because I think that's the maximum size that they let you trade. Today, I was just more so focused on getting through the evaluation, passing it, and then getting it over with. But when I trade this account, when it's finally funded, I plan on starting off with 1 regular mini contract. So $5 a point, and then just keep it going from there and look to build the account up to a level where I feel comfortable to finally start trading 2 and then eventually 3 and then eventually 4. But I'm gonna start with 1 until I feel comfortable, because when I got funded back in 2019, I think the first time I got funded, I got the account on like a Tuesday, and by the time that next Wednesday rolled around, that next week, the account was gone. Second time I got funded, I think I got the account in like the beginning of September, and I kept the account until November, but it was really blown by the end of September, and I was just trading micros, just trying to make back $1,000 worth of losses by trading, $1 points, and that's just a tough task. You in too much of a hole, and you can't trade big sides, because if you trade one loss, the account is blown. But eventually, I got to the point where I did blow the account, because I'm like, look, man, it's no point in trying to hold on to this. It's not gonna work out. So I think the reasons I blew that account was because I was just doing whatever. I don't know what got into me back then, but my mind frame was just completely flawed. I did none of the things that got me to that point to actually get funded. So I think that's going to be the biggest difference this time, and that's what I need to do if I want to keep the account. I need to continue doing what I've been doing, and that comes down to the mental mind frame. I can't treat this account like it's something different and that it's something new or unique. It's not different. It's the same thing I've been doing since I started doing these trade reviews, which is taking trades in the market on the Dow Jones, looking for my best setups every single day. That never changes, whether I have my own personal account or whether I have 20,000, funded accounts. It doesn't matter. The process to be successful in this trading game remains the same, no matter what type of account is being traded. Whether you're trading 1 micro or 100 standards, it doesn't matter. The process doesn't change. So really, I just got to stick to what I know and keep doing the things that got me here. I felt like that was really long-winded. I feel like I'm talking a lot. So I hope you guys learned something from that. I'm going to go ahead and call it a wrap right there. This is amazing. This isn't a very amazing thing. I can't believe I'm funded, but it's time to keep going. I'm going to take tonight to celebrate and pat myself on the back. But after that, I'm right back to it, grinding it out and just trying to become the best possible trader that I can. This is my first funded account in 4 years, and I'm not content. I'm not happy. I'm looking to continue to build on my progress and keep going. So that's all I got for you guys today. I'll be back tomorrow on October 3rd around 9:30 a.m. ready to run it back again and do it one more time. But until then, you guys have a good one and take it easy.